Purchasing a stock is simple, but selecting the appropriate stock without a proven approach is extremely difficult. Market activity has been difficult so far in 2022, with inflation fears increasing and the Federal Reserve adopting a tougher stance on interest rates and bond purchases shrinking. Let's take a look top 5 stocks this month. But before we get started, be sure to subscribe to our channel and ring the bell to get notified about our latest videos. Number 5. Google stock. According to MarketSmith Research, Alphabet has built out a cup base with an excellent purchase target of $3,031.03. It has risen above its 50-day and 200-day moving averages. Google stock might be purchased here as an early entrance or as a long-term leader. The relative strength line fell after a post-earnings jump, but it is already beginning to rise again. The RS line compares a stock's performance to that of the S&P 500. Google has a high IBD composite rating of 93. This places it in the top 7% of all stocks monitored. Earnings outperform stock market performance with an EPS rating of 96 out of 99. Earnings have increased by 105% on average during the last 3 quarters. This is nearly 4 times the 25% growth rate expected by CanSlim investors. Google earnings per share are expected to rise 17% in 2022, then another 17% in 2023. Alphabet expects a significant rise in capital spending in 2022, owing to investments in computer servers and office space at internet data centers. Google aims to use contextual technology, which allows marketers to target aggregated groups of customers who share common interests such as travel, sports, or fashion. Number 4. Broadcom stock. According to MarketSmith's research, Broadcom stock is trading around its official purchase price of $677.86. Last week, AVGO stock jumped 3%, giving it a month-to-date gain of over 8%. Following a fall, the relative strength line is soaring again, which is a positive omen for the future. AVGO stock has shown a yearly profit increase over the past 4 years. In 2022, annual EPS is expected to increase by 27%. Analysts' estimates have just been revised upwards, which is a good sign. This comes after the company's profit per share increased by an average of 26% over the previous 3 quarters. In 2022, EPS is predicted to increase by 27%, and in 2023, it is expected to increase by another 10%. It has been getting great reviews, which is a good sign. The chipmaker received a lift earlier this month after exceeding Wall Street's expectations for fiscal Q1 and forecasting faster revenue growth in the current quarter. The company's earnings per share increased by 27% to $8.39, while revenues increased by 16% to $7.71 billion. According to FactSet, analysts projected Broadcom to earn $8.13 per share on $7.61 billion in revenue. Broadcom expects sales of $7.9 billion in its fiscal second quarter, which ends May 1st, up 20% year over year. Analysts had anticipated revenues of $7.43 billion. Number 3. Apple stock. Apple stock is trading above a double bottom pattern entrance. According to MarketSmith, the best purchase point here is $176.75. By retaking its 50-day moving average, Apple shares accomplished a significant aim. It comes after the stock recovered from its 200-day moving average. Momentum seemed to be on its side after climbing 10 sessions in a row. As an early entry point, aggressive investors may have utilized a trend line right above the 50-day line. Apple's composite rating has risen to 94 out of 99. Apple was the first business to achieve a market valuation of $3 trillion earlier this year, and its shares raised after the company reported results for the first quarter of fiscal 2022. Apple's EPS growth has averaged 65% over the last 3 quarters. This is much over the CanSlim's Cognoscente's target of 25% growth. Earnings are expected to rise 10% in fiscal 2022 and 7% in fiscal 2023, according to analysts. Investors will want to see CEO Tim Cook produce even more remarkable results. Number 2. Marathon Petroleum stock. After clearing a flat base entry point of $81.49, Marathon Petroleum is in a buy zone. Given the recent outperformance of energy companies, investors may believe now is a good time to cash in. The stock is trading well above its main moving averages, and the relative strength line is improving. MPC stock has risen by 25% thus far in 2022, as the Russian-Ukraine conflict has impacted energy markets. The oil refining and distribution sector have a composite rating of 95, which is excellent. Earnings are currently behind price performance. Nonetheless, progress appears to be on the way in that regard, with green shoots already emerging. Marathon's fourth quarter earnings exceeded analyst projections. EPS of $1.30 was more than 130% more than expected, a remarkable performance by any measure. Investors also approved a $5 billion increase in the company's share repurchase program, despite an increase in Omicron cases. CEO Mike Hennigan said gasoline consumption held up well in Q4, while diesel demand benefited from highway trucking volumes meeting or exceeding seasonal records. Number 1. United Health stock. Above a double bottom purchase price of $501.03, the UNH stock can be bought. On the double bottom pattern, a handle entry has also appeared, with a lower purchase target of $500.10. It's now trading higher than both of these levels. One reason to be bullish is because of the relative strength line. It just reached a new high, which is a positive sign as it prepares to attempt a breakout. However, with an EPS rating of 95 out of 99, earnings are a major strength. Over the last 3 quarters, earnings have increased by an average of 24%. Wall Street experts predict double-digit earnings growth. Profits are expected to grow by 14% in both 2022 and 2023. In the fourth quarter, United Health's profits per share increased by 78% to $4.48. Revenue increased by 12.6% to $73.7 billion. Full year 2022 adjusted EPS of $21.10 to $21.60 were reaffirmed by management. According to FactSet, United Health will earn $21.62 per share. Despite being the second largest healthcare firm by revenue and the largest insurance company by net premiums, UNH is continuously looking for new opportunities. So, guys, that was it for this video. What did you think about our video? Let us know in the comment section below, and if you are new to our channel, be sure to subscribe and ring that notification bell to get notified about our latest videos. Thanks for watching.